Thank you for joining us for There's No Such Thing as Business Taxes. I can't wait to break this out for you guys today. We are going to cover this topic because there's a lot of misunderstanding around taxes in general, especially when it comes to your business and your personal and how they correlate to each other. So if you guys are ready to dive in here, we are going to go ahead and get started. So the first thing I want you to remember is that there are several different taxes that may affect your photography business. There's federal income tax, state income tax, payroll tax, sales tax, self-employment tax, and estimated taxes. We covered these taxes, each of them in depth in last week's training. So go check out the replay if you want to dive deeper into all of these taxes. Today, the purpose of this is showing you all the taxes and sort of how they break down to the main taxes, and then how that is really not connected to your business and is actually connected to your personal. So we're going to go through each one real quick. Sales tax, we'll start here. So sales tax is imposed by your state. You guys, we covered that last week, but imposed by your state. You are collecting this tax, you are holding on to this tax, and then you're remitting it to your state, right? So it really doesn't attach to your business in the sense only that you're going to charge it, you're going to hold it, and you're going to remit it. You're not actually paying it. It isn't like something that is, you have to pay so much of this. You are collecting it, holding it, and remitting it. And that's something I want to stress like that. And again, we covered that in last week's training. And then you are holding on to it and remitting it based on your state sales tax laws and schedules. Then, so that you'll see here that we're going to fade out sales tax because we're not worried about that one. We understand how that works. And you have payroll taxes. So these are taxes paid on employee wages or your own wages if you're an SCorp, because remember, SCorps have to be on payroll, and we dive deeper into that in other trainings. Payroll taxes are mostly withholding, right? So withholding of the federal and state income tax. So you have I'm going to turn this on. So we have the federal and state income tax. So payroll tax is really just withholding these taxes out of your paycheck. And, that makes sense, right? So that's really, that's how those taxes connect. Let me know if you're following along with me. Let me pull that chat back up. Awesome. Okay. I realize there's these animations between each one, so I do apologize that it loads, but so we've now faded out payroll tax. So last but not least, we have estimated taxes. So again, estimated taxes are just you calculating as you're going through the year, figuring out what you might owe on federal and state income tax at the end of the year, right? So it's really just an estimation of these taxes to be paid. And this is basically based on your W-4 of what should be paid of these taxes. Does that make sense? So now we know sales taxes, we're collecting it and we're remitting it. Doesn't really have much to do with us. We're just following the rules and the laws. Payroll tax and estimated taxes are basically different versions. Payroll tax is the federal income tax and state income tax just being withheld based on our income out of our paychecks. If we are an SCorp or an employee, or we are withholding from employees' paychecks for them if we have employees. Estimated payments are us figuring out on our net profit how much federal income tax or state income tax might we owe at the year end and making an estimated payment so we don't have a huge balance at the end of the year, right? So give me a thumbs up if you guys all are on board with that. So now we're left with federal income tax, state income tax, and self-employment tax. So these essentially are the taxes, right? So this is the tax. These are the ones you have to worry about based on your profit each year. But all of these are personal taxes. And I'm not sure, and I'm curious to know if you find that shocking or you knew that, but federal income tax, state income tax, and self-employment tax are all personal taxes. So you're probably maybe like, what, Tiffany, what is going on here? But this is true. Unless you are a C corporation, this is usually like bigger companies or C corporations like Target, Starbucks. They have a separate corporate tax return and a separate corporate tax based on the company's profits. Everyone else does not. Every other entity is known as something called a flow-through entity. So let me show you how this works. So if you are a sole proprietor or a single or multi-member LLC that has not elected SCorp status, because remember, I cover this in other trainings, but you have to be an LLC in order to elect to be treated as an S corporation for tax purposes. But if you have not done that election, you are simply just a single or multi-member LLC. Or if you are a DBA of an LLC or sole proprietor, again, covered in other lessons, but a DBA, you can create a doing business as name underneath a sole proprietor or underneath an LLC. So if you are any combination of these, you are what's called a flow-through entity, and you file your business income and expenses on your taxes on a form Schedule C. Have any of you heard of a Schedule C? Let me know in the comments of the chat. Is Schedule C something that you're like, okay, now I've heard of this before? Because what I'm going to do is take you on a fun journey of some tax forms to show you how this works, how you can see how all of this flows through. So let me just open up my folder of forms I've got here for you. So what's fun is I want to let you notice a couple things. It says Schedule C, Form 1040. Now, you may not be familiar with, and let's pull this bad boy up here. And I want you to also notice, guys, we are going over this in late 2022. And so you can see here that this says do not file. This is actually preliminary. Every year, the tax forms get updated based on new tax laws. And so the new forms are actually not, I think, finalized till the end of the year, but we're looking at the preliminary for 2022. So just be aware of that. It's got the stamp on it. So 1040 is the U.S. individual income tax return. And all of you file this every single year. Okay. You might have a 1040 easy, which, would be, it's the same form. It's just got less information. It's for people who have less complicated returns, but 1040 is what you're filing. And so on this 1040, when you go through, there's the income section, right? So you're going to go through all these various forms of income, and then you're going through tax and credits, and then any payments made. And there's all of this. I love this form. It gets me so excited because it's like so organized and everything attaches to something else and everything gives you instructions. It looks overwhelming at first. And I'm going to let you know inside the membership I'm going to tell you about at the end of this, I do an entire walk through every single tax form and line and what lines pertain to you, what don't. So you can learn all about that stuff. It's knowing the why, right? So when we're in the income area, you're going to notice that there is a line. See the income. I'm looking for the line. I think it's down here. Here we go. Other income from Schedule 1, line 10. Okay, so this is your main tax form. When you're going through it, obviously, most people do not fill this out by hand anymore. Your software will do it for you, but this is what happens. So on line 8, this is where other income from Schedule 1 comes from. So then you're like, well, what is Schedule 1? And lucky for you, I have Schedule 1 here for you as well. So Schedule 1 goes through all these other different kinds of taxable income that you need to report. And on here, we will find the business income or, well, that's going to be funky. You can see that business income or loss. So you have to attach your Schedule C. So if we go back, we have our Schedule C. So we're back to where we were started, right? So your 1040 says, bring this stuff over from Schedule 1. Schedule 1 gets it from the Schedule C. And this is where you're going to report all your business information. So this is the name of your proprietor. So if you have not registered a business name as a DBA or an LLC, this is your name. This is your social security number. If you have an LLC, then you're going to put your business name down here and you're going to use your tax ID. Okay, but I go through all of this deeply in the membership, and also we'll be going through how to use QuickBooks, how to set that up for yourself, and then how to actually import that information in TurboTax to do your own taxes. So that's a huge part of what's going on in the membership. Again, I'll get to those details at the end, but I want to go through this with you. So this is where you're going to report all the income from your business, all of the deductible expenses, and that's going to bring you to the amount down here that will say, if a profit, enter on both Schedule 1, Form 1040, line 3, and Schedule SE, and that's for your self-employment tax, which we'll cover in a little bit. So basically, you can see that you're just attaching a form to your return. You're putting your business information in there. It's flowing through to Schedule 1 and then on to your 1040. When we look at the 1040, you can see that your business income is just a blip, right? It's just a blip in all this other stuff that you can be claiming, other income you might have, other expenses, which ultimately comes down and calculates to the amount that you owe if you owe money or the amount of your refund. Real quick, while we're on the 1040, this is a super bonus, but I always ask people, I challenge them in other trainings and on Facebook Lives and stuff to always check this field here, because a lot of times people don't realize, because those estimated quarterly tax payments are always due. So a lot of people don't realize there's an estimated tax penalty, and it's usually right here and nobody tells you about it. If you go to H&R Block or you go to any place that does your taxes, a lot of them won't actually point that out to you, and you've actually paid penalties if you didn't make estimated payments. So I always challenge people to go check it out, but I rarely have a 1040 in front of me to show you where that is. Let me know in the comments in the chat, are you with me so far? Does that make sense? So if you are not an S-Corp and you are not a partnership, which we're going to cover here in a second, you just file a Schedule C. So that money goes from, all those figures go from that Schedule C to Schedule 1, from Schedule 1 over to your personal tax return. And now you have personal taxes due or get a personal refund based on that. It has nothing to do with your business. Make sense? All right, so let me go back to the slides. We'll close these puppies out for the moment. And now let's talk about S corporation. So if you elected S corporation status, if you're like, what the hell is that? Or you want to learn more about that, again, I dive deeply into that inside the membership. I have an entire lesson comparing what an S Corp, how it can save you money. It's definitely a mission I'm on. I would say most of our one-on-one clients that we onboard, we eventually bring to, I'd say about 80, probably like 85, 90% of our one-on-one monthly photographer clients are S corporations at this point. Anyways, an S corporation. So what happens is when you elect S corporation status, the IRS says, okay, your LLC can be treated as an S corporation for tax purposes. And that means that you have to file a separate return. And that return is actually due on 3/15, not 4/15 with regular taxes. And that's because we need to calculate your business income and expenses, and then we need to issue you a K-1. And the K-1 gets used on your personal return, just like the Schedule C. So let's look at those. I'm going to pull up the 1120S form for you. So this obviously is an 1120S. So this is an income tax return for an S corporation. And you'll notice that it has the similar header information that the Schedule C did, right? It's got a lot of the same fields. What is your income? What is your, and then here's your expenses. All of it's very similar. You guys see that? But this is now a separate return filed on 3/15. And with this return, when you come down here, there's several pages. You go through the other information tab. Again, I go through all of this in the membership. This is where you start to report, because equity, right? I guys want you to think about this. From the day you start your business, any income you make, any profit rolls up to your owner equity. Any draws you take out or distributions or expenses lower your equity in the business. And that equity on your balance sheet, when I say balance sheet, this is why it's super important to have proper bookkeeping, because the balance sheet tells you so much. And I don't care what CRM you use, no CRM does bookkeeping properly. I could go through the whole gamut of them, but none of them have a balance sheet. They may have we'll call it a half-ass P&L, but they do not have a balance sheet. All right. So here's where we get the Schedule K stuff. So then what happens is you're going to get this K-1 form. It's going to be filled out to you as the owner of your S corporation, or maybe you are 50-50 with somebody else in the S corporation. It's going to report how much of that is yours. And this ordinary business income or loss, essentially, it's just like that same line on that Schedule C. So this comes over to, I believe, oh my goodness, I think it gets reported on schedule. There we go. So rental real estate, royalties, partnerships, S corporations, trust. So Schedule E, I did not grab a Schedule E for you guys, but essentially it's just like the other schedules where you're going to list that stuff out. So your K-1 information is going to get reported on the Schedule E, which then flows back over to Schedule 1, which then flows back over to your 1040, where again, it's sort of just a blip in the entire tax situation of all your income and expenses. Does that make sense to you guys? And just for measure, we're going to go ahead and we will talk about partnerships real quick. It's not very common in photography, but it does happen. And now realize a couple things. One is that you can, as soon as you have more than one person in LLC or quote unquote multi-member LLC, it's essentially a partnership. So you have to file a partnership return. So 1065, as you can see, Form 1065, it's a U.S. return for partnership income. And you're going to see, look at same kind of header as a Schedule C, same kind of header as the 1120S for the S corporation. It's still asking the same questions, income, expenses, all the same stuff, right? And then you know that flows over to then you're going to get a K-1. So it's similar to the K-1 for the S Corp. And again, these forms are drafts. See, you can see them. They are created, but they're not finalized for 2022 tax year yet. So don't let that confuse you. They should be by end of year, but they have to start coming out with preliminary forms so that people know what's going to be on them. So But anyways, this K1 looks very similar to, here's the K1 for the 1120S. 1120S, very similar, right? And then this is for the Form 1065. Now we know that that goes to the Schedule 1 form right here. So again, your partnership will be reported here. Now there's this Schedule E here. In fact, let me just grab the Schedule E for you because I'm all about visualization. You're just going to see that the Schedule E is nothing more than basically listing out. Here's your Schedule E popping up now. So Schedule E, as you can see, it's going to be, if you have a rental property, so this is the other huge part of this, this is where you're going to report all that information. If you have income from partnership or S corporation, that gets reported here, right? And then it flows over to our Schedule 1, which we now know goes over to an actual other income from Schedule 1, line 10, right? So if we go look at Schedule 1, line 10, Schedule 1, line 10 is here after we've added up all the income. Does that make sense? Give me a thumbs up. Like, let me know you're on board. I know you're probably like, oh my God, Tiffany, I did not know you're going to be pulling out all these tax forms, but I want you to see these look overwhelming at first, but once you understand what every single line is, which is what I teach in the membership, like, then you know what's going on. And I look at these as like a roadmap, right? Every line tells you what something comes from the next line. I kind of like that. It's sort of like a little, I don't know, maybe I'm scaring you guys because I like it too much, but I mean, it gives you the instructions for everything you do. So the point is of all of this stuff that we've talked about is that none of this is a business tax. Do you notice that? Do you notice that none of these are not on the 1065, not on the 1120S, not on the Schedule C? Do you go to it and then say, all right, now let's calculate your tax on it. Here's what your business owes. That's not how it works. It all flows through to your Form 1040. So when we look at this, you can see that these are all personal taxes. All of these flow to your personal return, where taxes are then calculated with all of your other deductions and all of your other income and your credits, et cetera. And you may owe a balance or you may be getting a refund. But that is a personal balance that you would owe, and that is a personal refund that you would receive. So you have to take the cash. So what if you have to take that cash from your business? Are any of you wondering that? Like, what happens? Like, I find out I do my taxes and I owe $15,000 because I had a really good year and I didn't realize that. And I didn't know I needed to make estimated payments, blah, 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 right? Like, how do I pay that? So you can take money from your business, but you have to remember anytime that you take money from your business, it is an owner draw. It lowers the equity in your business because you are taking cash out of your business for a personal taxes. So these should be paid from personal. I know a lot of people, and tell me in the comments or the chat, how many of you set money aside into a business account? You're like, okay, this much I just put over here for taxes. The second you withdraw the money from that account, it's a business account. The second you withdraw to pay taxes, it is now an owner draw. Does that make sense? And so that's kind of all of this to bring you to this conclusion, where I run into that a lot, where people, I just finished doing a bunch of extensions back in October, and a lot of my newer clients didn't realize that. And I had to sort of educate them on, yeah, these are personal taxes. It's not, you might have 30,000 sitting in your business account, but as soon as you take it out, it's an owner draw. Now that's fine, because it technically doesn't really affect you. It lowers your equity in the business, sure. But if you're not an SCorp, it doesn't really affect you. But if you are an SCorp, or you are thinking about becoming an SCorp, your equity is very important in the idea and calculation of monitoring how much equity you have in the company based on how much you're taking through payroll, based on how much, because you can take tax-free distributions from an S corporation still, which is basically their verbiage for an owner draw, but it all has to stay in balance. So you're not taking more out than is come into business, right? But these are personal taxes. And that's what I want you to know, whether you have an S corporation or a partnership. And sometimes I think people, form S corporations and think the S corporation has a separate return. And so we're going to pay taxes on it separately or something. And you're not. It all flows through. That's why also tax planning, which we cover immensely. And I give you access to my tax planning software and show you how to use it inside the membership. But that's why tax planning is so important, because tax planning is your whole picture. You are a whole person with personal and business and all these things you have to consider when you're planning for taxes and trying to keep more of what you're making, right? One last tax we're going to hit on before I jump into the Q&A is the self-employment tax. Okay, so remember, we had federal income tax and state income tax. So what I just showed you were all the federal forms. Now, every state Almost every state has income tax. There are a handful that do not. If you are one of those states, God bless you. If you are not, you have a separate set of forms that honestly, when you're using tax software, get filled out from the information that you're putting in generally anyway. And they have their own calculations. But again, it's state, you are paying personal state income tax, just like the federal. It's not business. Self-employment tax is a second tax. So you have federal income tax, state income tax. So those are income taxes on your personal income, which includes your business income, et cetera, right? Self-employment tax is a tax, and we do cover this deeply in last week's lesson, but when you work for yourself, you are not paying into Social Security and Medicare like you would be out of a paycheck. If you're an S corporation, you no longer pay self-employment tax on your tax return because you are on payroll in your company. But most of you are probably not S corporations. And if you're interested in learning more of that, please meet me in the membership. I will tell you all about it. But the thing is, self-employment tax is the IRS forcing you to pay out of your self-employment income 15.3%, which covers your Medicare and Social Security so that you have that money paid in for yourself when you're older. Does that make sense, guys? And I will love to show you, there's actually a form for that. So we're going to go through one more set of forms here. So we're going to go back to the 1040 that we were looking at earlier. So here's form 1040, right? So 1120S does not pay self-employment tax, but let me find my Schedule C. Schedule C, there is a line on here for self-employment tax down here. So once it sorts out, okay, what's your profit? Then there's some math to be done. See this? So if a profit, enter both on Schedule 1, line 3, and Schedule SE. Schedule SE is self-employment tax schedule. So I'm going to pull that up for you. So Schedule SE, self-employment tax, see, and it's all part of Form 1040. So it's still part of your personal return. So you will go through here and figure all this out. But essentially what it comes down to is 15.3%. So it does this multiplying the amount self-employment tax. So that is the 2.9% plus 12.4% is 15.3% of self-employment tax. Then it says enter here and on Schedule 2, Form 1040, line 4. So then we go back to our 1040, line 4, I believe it said. And I believe that's Schedule 2. That's what we're missing, Schedule 2. Is there I know there's a lot of forms. The point of it all being that your Schedule C is going to go over to your Schedule 1, your profit, right? And it's going to go to your return. And on that profit, you're going to pay federal income tax, state income tax, after all your deductions, credits, and other income. And then on top of that, you're going to pay 15.3% self-employment tax. It's going to be calculated based off that Schedule C2 onto the schedule. Actually, it goes from Schedule C to self-employment schedule to Schedule 2 to your 1040. Do you guys follow? Does that make sense? So all of this to say, really to understand that everything here that goes on in your business, unless you are a C corporation, is all your personal responsibility, and your personal situation, whether you're married or have children or what credits you get, also affect that. So you can't actually look at it and say, my profit is $10,000. I'm going to put 30% in the savings account. You can, but also the tax tables are marginal. So it's not even like a straight 30%. I also teach that in the membership. I'm going to get to that membership information here in just a moment. But yes, I mean, please give me a thumbs up, give me a comment, let me know. Did you learn something today? Does this make sense? Was this clear? And I'm going to pull up the information here. I just want to share with you guys just really quickly, I've been struggling for the last 2 years to figure out the best way. I have a bunch of courses. I have Master Your Bookkeeping. I have the Total Tax Transformation, where I teach all the foundational things about taxes, what you have to worry about. I teach you about business structure, teach you about insurance. I teach you about license and permits and sales tax and all the things you need to know. And I've just really struggled because I have all this beautiful content and it's in silos, because somebody might buy Master Bookkeeping, where I teach you how to set up QuickBooks Online for your photography business, how to maintain it, how to do all these things, what are financial reports, how to get that to your tax return. And then I have the Total Tax Transformation course, which is all the foundational things you have to learn. Then I have Sales Tax 101. So essentially, I've been trying to figure out how can I get this content, because somebody will have a question in one of the courses, and almost every single time it's because they need the content from another course. I said, I cannot make this one huge course. That would be super expensive and overwhelming for someone to log in and have so much. So what I decided to do, plus I want to support. And so I was doing all these various different calls and it got to be crazy, right? a lot of times I'd be on a call helping with one thing and say, oh, that information is in this course. So what I've decided to do is after November 15th, I will no longer be selling my courses separately. They will all be housed, all the content and all future updates and new content every week will be inside the Legit Photographer Collective. And so this is so much more. I'm so excited because I'm going to be building it in Searchy. I don't know if you've ever heard of Searchy. So I've done away with Kajabi. Searchy is a platform that hosts memberships, but in this way where every single video has been transcribed. So you can actually search for a word like PayPal or Dubsado or tax or sales tax, and you are going to get a timestamp transcription of every single video and where I talk on that and teach on it. But in even more deeper than that, I've created phases. There are going to be 5 phases to this. So phase 1 is going to be getting in and understanding the foundations. Phase 2, so you kind of graduate into each phase. Phase 2, we get you set up and compliant. We make sure you register for sales tax if you need to be. I'm going to show you how to get a tax ID. I'm going to walk you through all the things to do. Phase 3 is getting financially organized. So this is where we set up QuickBooks Online and we start learning how to maintain our own bookkeeping and how to do all that stuff and how to get that to our tax return, how to do tax planning. I'm teaching you like everything and giving you access to all the apps that you need. My tax planning app, you'll get free access to that. QuickBooks Online, you can get my discount on your QuickBooks account. And then we go into phase 4, which is maintaining. We're going to get you a checklist of monthly and weekly routines, quarterly routines. What are you doing to keep up with your bookkeeping? How are you, the tax planning piece? And then you kind of can go to phase 5, which is like leveling up. Like when you decide, I want to buy a studio or should I rent a studio? Like I can help you. We're going to talk on those topics. On top of that, we're going to have a masterclass each month. I've already got the rest of the year booked out. We're going to have a pricing masterclass and a pet photography secrets masterclass coming from amazing guest speakers. On top of weekly support calls, I'm going to be doing a weekly QuickBooks Online call where I can actually screen share with you on Zoom. Like I am so excited about how everything is going to be housed. And I know that if you're in the membership, you have access to all the tools and resources. Plus, I'm able to connect with you every single week and keep you moving through those phases. So you can't tell I'm super excited. So here's the website. Here's the information on the Legit Photographer. It's currently on a wait list. But you will be getting an email when the doors are going to open on the 15th. Now, I also want to let you know if you have purchased Master Your Bookkeeping or Total Tax Transformation or my complete tax collection, you're actually going to get free access to this membership for the rest of the year. It will be $197 after that, but then next year we'll be increasing the price because the content in here is going to be gold. But $197 a month to have an accountant in your pocket, to have all the content you need, to basically have tax planning software, to be able to do everything in one place, and I can help you with that. It's just priceless, really. So thelegitphotographer.com. Again, remember, if you've purchased any of my courses, please get on the wait list because then you will get the information you need to get your free access for the rest of 2022 when doors open on 11/15.